So in the recommendation we have given 5 shares this time as usual. So one thing which is very interesting to me is the Star Health Insurance. So many of them will be knowing that company. So it's the private health insurance company, and it is owned by private equity players as well as this late Rakesh Jhunjhunwala. They are combinedly owning this company, private health insurance standalone company. So most of historically we have seen mainly PSU general insurance companies, they were providing health insurance to most of us. This company is a private one, and their premium is growing around 15 to 18% every year, and the management also very confident of growing the premium income in coming years also around 15 to 18%, and profitability to increase. And the other main thing about the company is that the combined ratio is less than 100. That means their core health insurance business is profitable. Apart from that, they will get other income from the float money they are receiving from the premium. And so overall the company looks very interesting for long-term investment. Next 3 to 5 years, somebody considering for investment means this company looks very good. Valuation also very reasonable. A company came with an IPO around 900 rupees 3 years back. Now after 3 years, it is still trading at a huge discount to IPO price. During COVID time, they made some losses, and that's why they did not. Company hasn't given any dividend. So all the losses will get wiped out in current year, and hopefully by next year they will start giving dividend. And it looks very interesting to me. Looks like a compounding story. This company, Star Health Insurance. Markets, if you see, means markets at an all-time high on a daily basis. It is going up. For the last few days, what was happening is that market is going up, but most of their portfolio has been underperforming because the most of their portfolios, what they were retail portfolios, what they were holding is mainly the PSU stocks. All banking, defense, railways, like that they were holding it, and that portion is on a correction mode for the last 2-3 months, and that's the reason why most of their portfolios are underperforming. And large caps, without movement of stocks, index will not go up. So the stocks which are going up are the Bharti Airtel, yesterday touched a lifetime high. ICICI Bank yesterday touched a lifetime high. Hindustan Unilever is going up well. FMCG companies are doing very well. So like that, many stocks are doing well on the index on a selective basis. That's why index has gone up well. Yesterday, foreign institutions overall bought nearly 14,500 crores. So the part of the buying is due to FTSE investments. So that money also came yesterday. So that pushed up the index very sharply. But yesterday was the first day. After many days, we are seeing some action in the mid caps. Many PSU stocks also participated. Yesterday, Cochin Shipyard, Garden Reach all touched 8 to 10% higher. So yesterday we saw some momentum coming back into PSU stocks, and there was turning among sectors also. The PSUs were underperforming, whereas many pharma stocks has done well, especially in the mid cap category like Marson Pharma, Jubilant. They have done well. FMCG is doing very well. Private sector banks, ICICI, HDFC Bank also looking good, momentum is there. Whereas some part we are seeing profit booking, especially in the PSU banks. Almost all PSU baskets we have seen good profit booking. So some churning among sectors is happening, and the broader market also, if you see, some stocks are doing well, some of them not doing well, and that is the reason why portfolio has underperformed the index. Most of the portfolio has underperformed the index. And one important thing which happened this week was the US finally has made a rate cut. They have front loaded it with a 50 basis point cut. Market was expecting either 25, or majority of them were expecting 25 basis point, whereas certain portion of the analysts were also expecting 50 basis point cut. And US Fed, they have finally cut within 50 basis point, and further more rate cuts will come in the coming meetings that we can see in the coming slide. And US market, everyone for the last 3-4 years since the COVID came, every year I used to hear that this year end that US will go into recession. like that everyone were telling. Almost 3-4 years passed till now, no recession was visible. Now everyone started telling that next year we may see the recession in US. So people keep on looking into it, whereas on the other side, everyone looking for recession, where on the other side, market is touching new high. Dow Jones closed above 42,000 for the first time in the last 2 working days in US. So market is going up, and many some of them are making good money, whereas those who are cautious and predicting the recession, they are on the sidelines and waiting for the recession and the market to fall. They are still waiting on it, and we don't know how long they will wait.
The trend is bullish, right?
Yeah, yes, sir.
Bullish.
Yes.
Bullish,
So overall Nifty and Sensex is up by 6%. Similarly, mid cap and small cap, that's also nearly 5 to 6%. It has gone up between the last second Saturday meeting and this third Saturday meeting. So almost in 5 weeks, market has given this much return. And US Fed has finally cut the interest rate. It was for the last 4-5 months everyone was expecting it. Finally this time they have cut it by 50 basis point rate cut. It is the first rate cut since March 2020. And during COVID time in March 20, they cut the interest rate very sharply at that time to fight against the COVID. After that, they hiked the interest rate very sharply. Historically, one of the sharpest rate hike they done it. Now, with inflation cooling down and crude oil prices and all falling, they have cut the interest rate. And 50 basis point they have cut it. And another 50 basis point in 2 stages is expected in 2024. So in October, we don't have any meeting. This is September. Next month, October, there is no meeting. And November and December, one meeting is there. So 25 basis point rate cut is expected in year 2024. So October, November and December, we will have 25 basis point. In 2025, that is next year, another 100 basis point rate cut is expected. In 2026, another 50 basis point rate cut is expected. So as of now, this is the expected rate cut by the analyst. So overall, 200 basis point rate cut from here is expected, apart from 50 basis point they have cut 2 days back. So now 50 basis point cut they have done it. Another 2% rate cut is expected in the next within 2 years. That means interest rate will fall to 3% in next full year in coming 3 months, and then 2025 another 6 months. So in 1 month, around 20 months, the rate is expected to fall to 3%. So this was the rate cut done during COVID time, 2020. They done it, and after that, when the inflation went to 7-8% in US, they hiked the interest rate very sharply. One of the sharpest hike in the US history. They done it, and now they have again started to cut the interest rate by 50 basis point. Rate cut directly it's not, it will not have impact on it, but through flows we may come. Sectors won't get affected positively because of rate cut in US. So this is the Dow Jones chart. It is almost at all-time high, above 42,000 it is trading, and it is continuously going up as an uncharted territory. US Dow Jones at an all-time high, and Nasdaq it's near all-time high. So both this market is doing very well in US. So globally, if you see, 2 markets which are doing very well is one is the US, the second one is the Indian market. Has given good return in the last 4-5 years. They have given not only in the last 4-5 years, in the last decade also. The 2 markets which has given very good return is the Indian market as well as US. Everyone was expecting recession, whereas market keeps on going up in US. So that is the issue. So US has cut rate. Whether here in RBI will cut rate. So in October we have one meeting. So most of them are expecting RBI will not cut any rate in October. Whereas in December RBI meet is there, December first week. They will start cutting rate. For the last few months, what we are seeing is that the RBI governor is little hawkish, and that is why we are not expecting any rate cut in October meeting. And RBI likely to act slow. So RBI likely to act slow. They are not going to hurriedly cut the like what US Fed is going to do. So initially first rate cut we are expecting in the December meet. October first week when RBI meet is there. So no, as of now no one is expecting. Whereas in December 25 basis point cut is possible. Then January, February, March, the first quarter of 2025, another 25 basis point cut is possible in our country. And the quantum of cut to be lower than US Fed rate reduction. So US Fed is going to aggressively reduce the interest rate because they have hiked the interest rate very aggressively 2 years back. So that is why their rate cut will be aggressive. Whereas here our rate hike was moderate. So the same way the rate cut also will be moderate for us. And food inflation is very high, but monsoon is very good. So post Kharif crop harvest, food inflation will start falling. And first rate cut by RBI we are expecting in December. So mainly RBI what they look is the consumer inflation, they look into it. But if you see that the RBI comfort zone is, RBI target for inflation is 4%, around 4%, plus or minus 2. So the RBI band for the inflation is 2 to 6%. 4% is the target for RBI, and plus or minus 2 is the band they used to target it. So for 2 to 6, whereas now the CPI inflation is around 3.5%, and the core inflation is slightly lower than that. And the core inflation is below the RBI comfort zone. 2 to 6 is the band, whereas right now the CPI inflation is less than 4%. So it is in the comfort zone of RBI only. But for the past few months, RBI is little hawkish for reason which we are difficult to understand. So we are expecting the first rate cut to come in the December, and food inflation also likely to fall from November, December onwards very sharply. And bond yield, if you see, already started falling. So bond market will be the first to indicate what RBI is going to do. And if you see that the from the 7.6% bond yield, the yield has now cooled to 6.7. Nearly almost 1% fall bond yield has fell, and it's indicating that RBI going to cut interest rate. And coming into the market, the sector churning, as I said, many of them are telling market is going up, whereas our stocks were not going up. Some of the sectors which were doing well is the FMCG, pharma. Many pharma stocks has gone up very sharply. The stocks which we don't follow actually. One company called Jubilant Pharmachem. They are in the radio business in US. They are one of the market leaders in radiology business in US. From 600, within 1.5 months, the stock has doubled to 1,200. Similarly, Marks and Pharma, 2 months back we recommended in our second Saturday meeting around 180 range. Yesterday it came to 320. Almost 60-70% it has gone up in the last 1.5 months. Like that, many stocks have seen perpendicular moves in this market. One company, Kitex, many of them will be knowing it. It was around 200 to 220 rupees. Within 1.5-2 months, the price has crossed 500 rupees. So like that, 50 to 100% move we are seeing in many stocks. Similarly, many stocks have also corrected. For example, Cochin Shipyard from 2,800 it fell to 1,600. Garden Reach is all these defense names fell 40 to 20%. It fell. It has corrected. So some stocks has gone up. Similarly, some stocks has come down. The correction on defense stocks is normal only because the stocks went up by 10 times, 15 times like that. So even a fall of 50% is normal. But already in TV, many of them have started written off that defense rally is over. From here on, they will see consolidation or price fall for the next 2 years, 3 years. Like that, many are telling in TV. But I feel that some upside will be there, strong upside in many of the defense stocks will be there from here on after the decent correction. And IT stocks, they have done very well. HCL Tech, Infosys, across the board, many IT stocks has done very well. FMCG is doing extremely well. The stocks like Hindustan Unilever, Colgate, Nestle, they are doing very well. And like that, many opportunities are still available in the market. Though some of the stocks which we are owning has fell. Overall, markets, there are many interesting opportunities still available in the market. One thing which is irritating everyone is that market is very resilient, and corrections, those who are expecting the corrections, it is not happening. and many of them are on sidelines holding cash for the past many months, waiting for the correction, but it is not happening. Even the big mutual funds like Quant Mutual Fund is holding huge quantity of cash. Then Parak Parak Flexi Cap Fund, almost nearly 75-80,000 crores they are managing in that scheme. That fund also holding huge cash. Many mutual funds are holding big amount of cash, waiting for the correction, and but that correction is not happening. So that is irritating many of the participants because market keeps on going up. Even yesterday's rally was a very surprising for many because people were expecting for correction, whereas market is going up. So if market keeps on going up means then fund managers may find it difficult to handle the money because when they benchmark with the index will go up very sharply, whereas the fund will underperform the index means then fund managers job will become very difficult. On one side, most of the stocks are trading at high valuations, and they don't want to invest at that price. Whereas the index goes up means they will underperform the market. So it will become very tough for them. And another interesting thing which is going to happen in the next 2-3 months is that the regulatory action we are going to see in the F&O segment. F&O, the future and option segment, they are going to increase the lot size, margin, and like that many going to come. So a part of that money may come into the cash market. They may come for cash market intraday trading. That money, part of that money may come. Similarly, SME segment also we are seeing that lot of manipulations are there, and regulatory action is likely to come in the SME segment also. So that money also may come to the cash market, the domestic money. And for the last 1 month, very good FI buying also there in our market. So if domestic retail money, HNI money and FII money comes means, then a market may find it difficult to correct. They can hold for any time. They can hold for any time. See, they are holding cash means they will park money in liquid funds like that, which will give for 5% interest. It's not like they are holding cash ideally. It won't give any return. 5% per annum they will get in that money. SME segment is also very interesting because if you see, many are calling to us. We are not closely tracking the SME shares because a lot of small companies are there where information is very less to get, and that's why we are not tracking that company. And recently, 1 month back, SEBI has issued advisory cautioning investors that they are asked to take informed decision because many stocks are going up without any rationale, and like that SEBI has given an advisory cautioning investors, and many stocks are seeing wild movements, and IPOs which are coming, they are subscribing by 100 times, 200 times, 500 times, like that it is oversubscribing. A company which wants to raise 20-30 crores, they are getting 5,000 crore collection, like that they are getting, which looks very artificial because very small companies getting such a huge oversubscription always raises eyebrows. And another thing is that in SME the lot size is higher. We have to invest 1.5 lakhs, 2 lakhs, like that we have to invest. Like a main board shares, you cannot buy one share. You have to buy 2,000 shares, 3,000 shares, 5,000 shares, like that you have to buy. And investment limit also very high. So one has to be very careful in buying SME shares. You have to do proper due diligence. Otherwise, if you get stuck in 3-4 companies, then most of the retail capital will get locked in, and even if you cannot exit also. So you have to do proper due diligence in SME segment before buying. Definitely some of the SME share will become multi-bagger. After 10 or 15 years, SME share would have gone up. Some of them may have gone up by 50 times, 100 times, like that. Whereas many stocks may also destroy wealth in SME. So you understand your risk and then invest in SME shares, because in WhatsApp so many messages are coming related to SME shares. They are asking to buy, and many fraud also happening in the fake apps, that they are giving messages that we will buy the shares which has hit upper circuit, so next day you can buy it, like that. Many fake apps are there. So don't fall into prey into this app, because the people losing money is very huge in that. 10 lakhs, 20 lakhs. In the last 3 months, I have heard 3 cases like that. the one person from Tirupur, one person from Erode. Last 10 days back, near to Trivandrum, one person came, said he gave 15 lakhs through fake app. He gave money. That 15 lakhs became 40 lakhs. When he asked that money, the person is telling that you give 20% commission to me. He is asking me to give 8 lakhs, then only he will release that money. He told. So if he give 8 lakhs means that money also will go. So many of them are falling prey to this fake app stories. So always be alert. Don't fall to, initially what will happen, they will show you a profit of 10,000, 15,000, small amount, they will show you a profit, and you will get convinced with that profit, and you start investing 5 lakhs, 10 lakhs like that, and when you ask them to give back the money, they will never give back. So always be careful. That's why SEBI has issued advisory, and you just study well, and if you are convinced, you buy into the, invest into these SME companies, as well as through this fake apps, fake apps and all. Extremely be careful. And this is the IPO frenzy. So SME IPO frenzy. So in 2012 onwards, SME companies started coming. So in 2012, only 14 companies got listed, and the amount raised was 127 crores. So it went up in 2017-18 when market was doing well. The number of IPOs increased to 67 and 135, 1,700 crores and 2,400 crores they raised. Then again it fell. But in the last 1.5 years, if you see, last year almost 5,000 crores they raised, and this year till September another 6,000 crores they have raised. So the amount of money raised this two alone last 1.5 years is more than what they have raised in their entire years from 2012 to 2022. And so it's good. A company which deserves capital for growth means definitely this SME is a good for them. But only thing, we have to exercise caution while investing in the SMEs. And GDP growth, it was lower than expected, around 6.7 it came. So mostly in line with expected, but lower than the historical growth level growth we have seen in the previous quarters. This is the election quarter, Q1 FY25, April, May, June, where the government spending was not there at that time, and that is why the GDP fell very sharply. And moreover, due to election, a lot of restriction was there. Cash, you cannot take cash while traveling, because if police sees means, then they will seize the money, then we have to show the proof, then only they give back. So many traders generally avoid doing big cash transaction during the election time. And more government spending was less. Even private also, they may generally slow down the capex, because they want to see the outcome of the election. Then only, suppose some hung government comes and they may change the policy immediately, means they may get affected. So private also generally will be hesitant to do big capex during the election time. So that is the reason why the GDP growth has come down. Even Q2 also we are not expecting big GDP growth, because Q2 monsoon was good this time, especially in central India and southern India during July-August month. It was well above the normal. So monsoon season, Q2 was the monsoon season. So only from Q3 onwards we are expecting the growth to resume. Q2 also will be a lull month. So Q1 and Q2 will be the lull, whereas Q3 will be strong, and Q4 will be very strong growth we can expect in GDP data. Most of the segment has done well. Agriculture growth is lower, whereas the industry has done well, 8.3, and the private capex also reasonably well when compared to previous years. And the other construction, if you see, 10% up, electricity 10%, services also reasonably shown good growth, 7.2%. So only the government capex was less, that is why the GDP growth is lower. Oil prices fell, but we are not expecting oil prices to collapse from here. Mostly oil prices will range between 70 to 90. That's what our expectation is. We are not expecting the oil prices will fall to 40, 50 like that. Most probably from here there is a possibility of some bounce back to 80, 85 level. So deep fall in oil prices we are not expecting as of now. Like $40, $50 we are not expecting. Mostly oil price will stay around 70 to 90. That's what our expectation is. Monsoon this time it was extremely good. As of yesterday, it is 7% above normal, and good monsoon likely to boost agri output, and food inflation will come down. Rabi crop is expected to be very good. Kharif crop is okay, some 2% higher acreage has been done, whereas the Rabi crop is going to be very good, and food inflation likely to fall from second half of FY25. And if you see the area, northwest 7% up, central India and southern India, the core agriculture belt, these two, central and southern peninsula, we had 17% and 16% above normal rainfall. So overall, the monsoon is this time is not bad. In spite of the expected La Nina did not happen, La Nina got delayed. In spite of that, we had a reasonably very good monsoon, and likely to end between 6 to 8% this year. Another 11 more days is there for the monsoon to end and officially end, and around 6 to 8% percentage departure from long period average is expected. SkyMet forecasted 102% of long term average, whereas the IMD, the government owned IMD, Indian Meteorological Department, they forecasted around 106% of long term average. Most probably in that range, monsoon will end. Mutual fund flows still very strong. So for the last 4 months, if you see, net flows in May 34,000, June 40,000, July 37, August 38. So in the last 4 months, this is one of the huge inflows we had it. And most of the money is still lying in the funds. They are not yet deployed it, waiting for the market to correct, whereas that expected correction did not happen. So good inflow still there in domestic mutual funds. SIP also very strong, 23,540, and many suddenly, when market corrected 1 month back, suddenly I started seeing a chart saying that we should not see gross SIP inflow, we should see only net SIP inflow. It is around 8,000 to 10,000 crores net SIP inflow is there. That what it indicates is that even though 23,000 crores is coming through SIP, some of them who have already put money through SIP in the past, they may redeem some part of it. So we have to see only net SIP contribution only we have to see. So this data we should not look like that. When these type of charts generally come when market is correcting. All this negative type of charts will come only when market is falling. So one time this N carry trade unwinding, one sharp fall came in the market. Suddenly the SIP, net SIP chart started coming saying that net SIP is only 9,000 crores. So it's very negative for the market. Like that I saw some chart, I got some few of them forwarded me saying that that mutual funds was not getting enough fund. But we have to see the gross net, maybe see net inflow, previous slide. See, all this will get discounted here. SIP flows, redemption, all this will get get reflected here. So the net inflow is 72,000 crores, whereas gross inflow is 72,000 crores, net inflow is 38,000 crores. So all this SIP inflows, SIP outflow, everything will get into this figure, 38,000 crore overall net they have gone it. So in the last 4 months, they have got around 38,000 crores net in spite of all the redemption. Not redemption is zero, inflow is higher than redemption. In 2012, 11 and all, I still remember where the mutual fund net inflow will be minus. Gross will be some 3,000 for gross figure will be lower, redemption will be higher, so net will be 0 to negative. If foreign institutions, we are seeing some foreign institution money coming back to our country. So till date it is 7.5 billion. Last year we had 25 billion, and previously 2 years were negative. So this year it's not as bad. Some inflows are coming. Last year also good. This year also some inflows are coming, and we expect that some inflow may come because rate cut also happening in US, and once the new policy announcement by the government, then more inflow we can expect by foreign institutions. And the events, main events, what I am going to watch is the government announcements. See, just before the elections, everyone were telling that the government has kept an target for the ministry. 100 days program they have given to all ministries, and they asked to that will be coming after 100 days of government formation. Actually 100 days of government formation is over now, and we expect that many positive announcements from the government. Shipping and all, lot of talks are happening. Some shipping policy they are going to announce. That's why yesterday we have seen the shipping stocks went up, and next 1 or 2 months the shipping policy they are going to announce it. Like that, many announcement I am expecting from the government, big ministries. They are going infrastructure, railways, like that. We are going to expect lot of government announcements in the coming days. So that may keep some stocks active. Then crude oil prices, we are not expecting major fraud from here. Then geopolitical news, actually geopolitical news, even though a lot of fights were happening, it is not impacting anyone, because the US election is there on November. So till then, I am not expecting any major negative from the geopolitical events, even though the fight is still going on between Israel and other countries.